In this section, we're going to show the impact of business transaction on the accounting equation. The accounting equation says assets equal liabilities plus stockholders' equity. Every business transaction has an impact on the accounting equation. And what we're going to do is take several transactions and see how the accounting equation is affected by that transaction. We're going to go back to these transactions and take a look at each transaction and how it affects our accounting equation. Let's first look at the item on January 1st. John Hammond inherits $1 million. We said that was not a business transaction, so that would not get recorded in our books of accounting. Remember, when we are doing financial statements, we are always accountants that work for the company. We are the company. So this particular transaction on January 1st would not get recorded because it's not a business transaction. The second one, January 10th, John Hammond invests $200,000 cash in exchange for common stock in Jurassic Inc. We are Jurassic Inc., so this is a business transaction and it needs to be recorded in our books. Before we go ahead and look at how it's recorded in the books, let's take a look at the impact of this transaction on our accounting equation. I'm going to use this spreadsheet to show you how this transaction would affect our accounting equation. If you see here on the top, we have our assets, and I have listed some asset accounts. This is our liabilities and our stockholders' equity. You know that assets equal liabilities plus stockholders' equity, so that is shown by these totals here. So once we put in numbers, you will see what our total assets are, and then this total, the purple one here, will show total liabilities and stockholders' equity. Now, we said that on January 10th, John Hammond invests $200,000 cash in exchange for common stock in Jurassic Inc. How does this transaction affect your accounting equation? Remember, we said there were two parts always to a transaction. There's giving and receiving. Another way that I tell my students to think about it is think of, you would have all probably heard in physics that for every action, there is an equal and opposite reaction. Accounting is a bit like that. So every action, there's an equal and opposite reaction. So in this case, John Hammond invests $200,000. What is that $200,000? It is cash. So our assets, which is cash, went up by $200,000. So we're going to say that our cash increased by $200,000 with this transaction for the business. That brings our total assets to be $200,000. But there has to be a giving and a receiving. What did John Hammond receive in exchange? He received common stock. Therefore, our common stock also increased by $200,000. Each action has an equal opposite reaction. $200,000 cash in exchange for $200,000 common stock. Does your accounting equation work? Accounting equation says total assets, which is $200,000, equals total liabilities and stockholders' equity, which is also $200,000. Liabilities are 0, stockholders' equity is $200,000, and cash is $200,000. Let's go back to the list of transactions. On January 11th, Jurassic Inc. purchases equipment for $55,000 cash. We said that that too was a transaction, so let's go and look and see how that affected our accounting equation. The date was January 11th. We're going to say 2013. We purchased equipment for $55,000 cash. So we got new equipment, so our equipment increased by $55,000. And I'm going to put that as a positive number because our equipment increased by $55,000. That is the receiving. What did we give? We paid cash. Equal and opposite reaction, right? We have to have $55,000 cash that we lost. So that would be shown as a negative number. So we would show negative $55,000 here. Now let's take a look at our accounting equation. Is that still in balance? Our total assets are $200,000. Total liabilities and stockholders' equity is still $200,000, so it is. This transaction affected not both sides of the accounting equation. This one affected only one side. Our assets went down by $55,000 for cash, but it went up by $55,000 for equipment. There was no net effect on total assets, so the total assets did not change at all. It just got redistributed from one account to the other. Okay, the next transaction is that the company leases retail space and pays $4,000 cash for January rent. Let's see how that would affect our accounting equation. So on 12th of January, we paid $4,000 cash. So you know that our cash went down by $4,000. What is the other side? There has to be an equal and opposite reaction. We paid rent. You know from chapter 1 that rent is an expense. Expenses decrease retained earnings. So what we do is we go to retained earnings and we subtract 4,000, because by definition an expense causes a decrease in retained earnings. By now you would have noticed that some transactions affect two sides of the equation, like this one. This one affected asset side and the stockholders' equity side, so both sides of the accounting equation. The previous transaction only affected one side of the equation. The rule is, if it affects both sides of the equation, the signs have to be the same. So this particular 12th January transaction, both sides are negative. Both sides went down. But if it affected the same side, one is negative, one is positive. So the 11th January transaction, one was negative balance, the other one was a positive balance. Continuing with this example, on January 13, Jurassic Inc. purchases $5,000 of supplies on account. So the date is January 13th. Let's see what accounts are affected by this. We bought $5,000 of supplies, so our supplies increased by $5,000. How did we pay for that supplies? We did not pay cash, we bought it on account, which means we have not paid for them yet. We bought them with the promise to pay in the future. Therefore, that's a debt, and the other side of it would be accounts payable. So 5,000 went up for assets. Our liabilities or debts also went up by $5,000. With that, your accounting equation is still in balance. The events on January 14th and 16th were not transactions, so we will not record those on the books. But between January 17th and 30th, the company earned $20,000 in revenues. Half of the revenues are cash. Let's go and see how that works in our accounting equation. Since it's happened over a period of time, we'll record it on the 30th of January. Now, we know that the company earned $20,000 in revenues. Revenues are part of retained earnings, and revenues increase retained earnings. So we will put $20,000 as increase in retained earnings. Now we have to record the equal and opposite reaction, the other side. How did we receive this revenue? We received half the revenues as cash. So you know that $10,000 was received as cash. So cash went up by $10,000. We still have $10,000 remaining from our $20,000 revenue. What was that? That would be considered accounts receivable. So you would add that to accounts receivable. I just created a column for accounts receivable, so we had $10,000 in accounts receivable. So that's your equal and opposite reaction. We had $20,000 in revenue, which increased retained earnings, and we had $10,000 in cash, which increased cash account, and $10,000 accounts receivable, which increased our accounts receivable. Our accounting equation is still in balance. Total assets are now $221,000. Total liabilities and stockholders' equity are also $221,000. The final transaction is between January 17th and 30th. The company pays cash for salaries of 6,000 and utilities of 2,000. Let's go and put that in the accounting equation. We'll record the date as 30th of January. Now we paid salaries of 6,000 and utilities of 2,000, both in cash. That's a total of $8,000. We would say that cash went down by 8,000 because we paid out cash for those expenses. Salaries and utilities are expenses which are part of retained earnings, and as we talked about earlier, our expenses decrease retained earnings by how much? Again, 6,000 for salaries and 2,000 for utilities, a total decrease of 8,000. So both sides got reduced by 8,000. Again, your total assets are still equal to your total liabilities and stockholders' equity. This shows the impact of transactions on your accounting equation. Later on, as we are recording transactions in our books of accounts, you will do this mentally. You will analyze it without actually putting it in your accounting equation. What you will do is, whenever you're given a transaction, you will say which two accounts are affected, two or more accounts are affected, and then you will tell yourself this particular account will go up, which particular account will go down. Sometimes both will go up, sometimes both will go down, sometimes one will go up and one will go down. But you have to be able to do this without putting it down on paper. So be very familiar with all your account definitions and your accounting equation.